Great. So in summary, today we look at a few areas of master budget proper. That's the first angle. Second, we look at for flexible budget, how to flex a budget. Flexible budget. That's the agenda for today. And basically, we introduce ourselves to standard costing and variance analysis. That is where we are going to introduce ourselves to. These are the three agendas. Now, each of these master budgets, I'll quickly look at just a question under which flexible budget is the same, and then we move on. The question on board is called Chobo for master budget. That is Chobo. It came in 2000, between 2011 and 2012. That's the question. But it is the question 3 of your material. So let's quickly look at that question to clear master budget. Master budget simple means we are preparing 3 forms of budget putting together. Budgeted statement of comprehensive income, budgeted statement of financial position, and then finally cash budget. Putting these 3 budgets together, they form what you call a master budget, Chobo, and then a flexible budget. Then we look at that one too. Now let's look at it. Chobo question number 2, which year? 10 years later. Wow. Okay, so now let's look at this question. But before that, there's a theory question on top of it that we can look at it. So budget is an effective management tool in business decisions. Explain 4 reasons why budget is important and state 4 conditions necessary for effective budget. So tell me 4 reasons why budget is important. 1, for effective planning. 2, for communication. 3, for performance management. 4, for control. 5, for coordination. 6, motivation. 7, decision making. That is all. And 4 ways that budget will be effective. 4 ways that a budget will be effective. Before budget to be effective, the following conditions must be in position. 1, accuracy or adequate or reliable estimate to avoid what? Errors. To try to estimate, because budget is about forecasting about what? Your coming forth activities in monetary form. That is all. So number 1, adequate accuracy, effective facts, and reliable estimate. Number 2, support from the top level management. Why? Because if we set budgets and at the top level set aside, the budget will not be effective. So the top level management should support what? The budget. Imagine that after the budget, they excuse themselves or they just take themselves out of the implementation process and then the budget will be on the lower level management. How we get it? Good. Number 3, before budget to be effective, there must be what you call participation. Allow the junior or the middle line managers to partake in the budget process because everybody respects the law that the person involved in the lawmaking process. So if they allow you to make a decision for yourself, you respect that decision more than you be there and then they've imposed that law on you. Good. All issues that you are seeing around. In fact, when they give you a chance to join the parliamentarians or the managers, the top level, you can never talk against them. Yeah, that is so now if you want to respect that law, then they should allow you to partake in a lawmaking process. That is all. Then finally, tell the examiner that before budget to be effective, there must be what? A feedback and investigation of what? Variances, if possible. So if last 3 years budgets compared to the actual, there was a variance. So 2012 variance, there was a vast variance. Nobody talked about it. 2013 vast variance. There's no investigation, no issue. 2014, the same thing. Now, 2015, I'm going to prepare the budget. This budget will not be effective because even if you're not able to achieve this budget, you're not going to take any action to investigate why we're not able to achieve this budget. So before your budget will be effective, make sure that all variances are investigated and then correct action has been taken or the due process. That is all for effective what budgeting. So I'll leave you with this few theory, then move on with the budget question. Basically, you are required to prepare a statement of comprehensive income per month in communal form for October, November, and December 2010. Yes, the same question came in November 2015. That one we call it Brofre Limited. Yes, Brofre Limited. That one will be on advance. So you are preparing comprehensive income, that's the A. B, budgeted statement of financial position in common form, October, November, December, and then cash budgets. Good. These three making what? Master budgets. Great. So let's quickly look at this. If we go through, the Chobo Limited has just employed you as management accountant. The following forecast information for the third quarter of 2010 has been provided to you. Save all of them are there. October, November, December. These are the units. Expected price per unit. Now check something for me. The expected price is the 20 there, but the arrangements is the little. So the next one is the closing inventory. The closing stock rather is the 20. That's the 20,000, 20,000, 20,000 for the 3 month period. So you can take note that this closing inventory is the one that's here. Percentage of gross on sales, that is what? 40, 40, 40. Then debtors, that's the receivable figure, 15, 30, 15. Then creditors, that's the last one, 25, 20, 28. I will get it. Great. So make those corrections for me if I have the hard copy with you. Let's go. Balances shown above are at the end of each month. In addition, the reserve balances projected for the end of September 2010 as follows, or shown below. Fixed assets, the depreciation, that's submitted depreciation. Stock, cash balances expected, unpaid tax at the end of the month. Creditors. So the following information has also been provided for your use. These are the notes. The company rents part of 6 apartments and the monthly rental of 25,000, and this is expected to remain the same for the next 2 years. So that's the rental income. So add it to your other income and also add it to your receipt in a cash budget. Selling and distribution expenses are expected to be 25% of each month's sales value. That's the selling and what? Distribution. Right. So 25% of the sales. Admins or administration and general expenses are expected to be 20,000 per month, but this will go upwards according to the growth in what sales revenue. So if the sales increase by 10%, this amount will increase by 10% in that product. Fixed assets depreciated at what 2% per month on cost. The company has agreed to purchase additional fixed assets at a cost of 100,000 in what? November. So it should be part of what? The November cash outflow, the payment. At the same time, add the PPE. The company has a plan to grow 80,000 from a friend of the director in November, which is in a year's time without what interest. So this is a receipt and at the same time a liability. Finally, the company pays tax 10% on net profit every month. This payment is actually done in a month after the month in which the profits were declared. So 1 month in arrears, that is all. Now let's quickly start again. So we are preparing comprehensive income quickly. I'll be extremely fast in here so that we finish our agenda today. First online, all my team should be in position. Can you help me with the calculation? So first, the name of the company should be dealt with. The name of the company. Let's start Chobo Limited. Chobo Limited. Chobo Limited. So Chobo Limited. Good. Okay, so start with Chobo Limited. A budgeted what statement of comprehensive income for the month of no shortcut. I'm begging you, no shortcut. So I put here October, November, and then December. Let's say for the 3-month period. Don't forget we are reporting currency. I am reporting in Ghanaian cedis. Yes, so please take note of that. So let's start with the sales revenue. Now, sales revenue, we need to multiply. They've given it to us. In some situation, you might not be given the sales revenue for free. So the unit is 10,000 times 20. Unit is November, 12,000 by 20. December, 15,000 by 20, basically. So this should give us something like 200,000 and then 240,000. Finally, 300,000. That is the sales revenue. Good. That is the sales revenue. Agreed. Friends online. Okay, so let's cost of sales. Let's go. Let's go. Cost of sales. Now, the cost of sales, you perform the work, is made up of open inventory or open stock. I'm sure you stock. So open stock, add your purchases to it, and then let's what the closing stock from it. So let's add it. Now let's look at the from the first, the open stock for the first year will be now the open inventory for the month of October is the same as the closing inventory for the month of what? September. So the closing inventory, that closing stock happens to be 18,000. So open inventory here will be 18,000. I need to get the purchases. But here what we can do is this. This becomes the cost of sales. Cost of sales. Right from cost of sales, we can find a gross profit. In exams, the examiner might not be able to give you everything. He must give you 2 so that you find the third one yourself. How do you get it? We have to give you 2 and you find the third one yourself. Now, the examiner gave us the gross profit, 40% margin, or 40% on sales. On what? Sales. Now, if gross profit is 40% on sales, cost of sales will be what? 60% on sales. So you can easily find these figures there before you can even find the remaining ones. That is all. So let me fill in the other items. The closing stocks have been given to us already. The closing stocks happen to be 20, 15, and 25 from the question. 20,000, 15, and 25. So here is 15,000, 20, and then 25. So that's 15,000. No, it's not 15. 20,000, then 15,000. Then finally, we have 25. Okay. Now the closing inventory must subtract, so put this in brackets. Don't forget that closing inventory for October becomes open for November. So it should be 20,000. Closing for November should be open for, that will be 15,000. But let's do something in here. So look at the purchases, it will be a balancing figure. This cost of sales and gross profit can easily be determined. So let's determine the cost of sales. Or its purchases becomes a balancing figure. Okay, so let's do something here. Now, kindly find 40% of this. That becomes the gross profit. So 40% on 200 should be 80,000. That's the gross profit, 80,000. 40% on 240, and that becomes 96,000. That's the gross profit. How do you get it? The examiner informed us that the gross profit margin happens to be what? 40%. So you can easily continue right from the sales. You can continue from here. The rest is just a balancing figure for you to find the other issue. Then what about the 40% of this? You give us 120, right? So that is 120,000. That's 120,000. Okay. Now, what happened is this. The cost of sales, you can also find it 60% of 200, or you can just find the difference. If the sales revenue is 200, what should I subtract from 200 so I can get what? The 80, or just 60% on the sales. So here will be 120,000, agreed. And then what about the November? Then we move on. So here will be 144,000. And then 180,000. 180,000. Okay. Now, comfortably, kindly find the purchases figure for me. What should be here? So that when I add to 18 and subtract 20 from it, I'll get 120. It's a balancing figure. Purchases figure becomes what? Balancing. Tell the examiner, it's a balancing figure. The same way, when the examiner gives you the purchases, he will never give you the gross profit. You find it yourself. That is the common or the normal practice. That the examiner will give us everything so that we will recast everything and then get the gross profit and those stuff. How do we get it? Good. Okay, so if you have it, this one it should give us 122,000, right? 122,000. That's all like this story. Okay, so I did that. So let's find the gross, the purchases in here. It's a balancing figure. What should I add to 18,000? When I subtract 20,000 from it, I'll get 120. So it means that here should be 122,000 cedis. It's a balancing figure. What should I add to 18,000? I don't get it. When I subtract 20,000 from it, I'll get 120,000. What will be the answer? If you don't want trouble to, don't worry. This figure 120 is also the same as 5 purchases, third examiner. It's equal to the cost of sales. So much is 120 Less the open inventory. Open inventory is what? 18. Let's it. Add back the closing inventory. Add the closing inventory to it, which is 20. This answer is the same as the purchases figure. The same as the purchases figure. So 120 minus 18 will give us 102 plus 20. That's 122. Perfect. You come and put it in here. When I come to November, the same show. What should I add to 20? If I subtract, when I subtract 15 from it, I get 144. So here you can start by cost of sales is 144, open inventory is 20. I'll subtract, add back closing inventory to give me the purchases figure. 139,000. I'll take that. Then the last one will be 190,000. 190. Okay, so the last one will be 190,000. That's the purchases figure for the extreme last one. 190,000. Basically. So that is a balancing figure. You need it. So take note of it. We are done with this. Let's go to that of the other income. So add your rental income to it. So rental income. Let's say that is 25,000 every month. So 25 here, 25,000 here, and 25,000 here. Now, what do we do? What do we do? I want to write more so to go there. Small rental income, but must be still eligible. Okay. So the rental income is 25,000. What's the total income? So the total income will be 105,000 for the first month, and then this and this. That should give us 1, and then 121,000, right? So 121,000. And finally, 145,000. We are almost done. Then less the expenses. So expenses, I'll go to the question. So expenses there are number 1, selling distribution is 25% of income. So kindly give me the calculation. Selling distribution cost. So selling and distribution. So selling and distribution, 25%. So October will be so 25% of sales. This one should give us 40,000, right? I should give us 50,000. Can you confirm for me? A quarter of that should be 50,000, right? 50,000. Should be 50,000 because 25% of 200 and 25% of this. And it's going to give us 50,000. You put it in bracket. Then here will be 75,000. Okay. Let's go to admin. Next expenses are admin. Administration and general expenses expected to be 20,000 per month. But this will go out of sales. So check admin and general expenses. They say now it's currently at what 20,000, and it's going to move in line with the increase in sales. It means that check the increase in sales. Tell me the percentage change in sales. Percentage change is equal to the new minus old all divided by old times 100. So from here to here, what's the increase? When you are done, I'll give you a shortcut. So it will be okay, 25% increase, right? There's a 25% increase. So now will be the 240 minus the 200 all divided by what? 200. So that will be 40 over what? 200 times 100. So what's the percentage increase? 40 over 200 times 100. Good. So now first year increment is what? 20%, right? That means sales increase by 20%. The same thing, admin also increased by what? 20%. So increase admin by 20%. Then it will be what? 24,000. Agree. If I increase this one by 20%, that will be 24. Find the increment in from November to December. Growth in sales from November to December. Now to be the difference 60 over 240 times 100. Yes. Now let me give you a shortcut. If you check the first figure here is the same as 200. 240 is 24 is the same as what? 240. This one should be also be 30. In fact, if we check the increment was 25%. So increase it should be 24,000 here times the increment 1.25. Agree. And you still get the 30,000 that we are getting in here. Basically, that is it. So basically, that is the administrative expenses. Like the last one, then we move on. The last or the next one will be fixed assets depreciated at 2% per month on cost. So every month find 2%, and that's the what the depreciation. Now, take note of this. Okay, so basically that is that. So let's find depreciation. So the depreciation is 2%. So depreciation is about 2%. Let's calculate it quickly. Okay, so depreciation 2%. What's the cost of the machine? The fixed asset is what 500,000. 10% or 2% on 500,000. That is 10,000. So here will be 10,000. What about October? So what about November? November will be 10,000, right? Each month. November, let's go to note number 5. Company has agreed to pay additional fixed at the cost of what 100,000 in November. So to increase it, so November depreciation will be on 600,000. Originally I have 500. When they give additional 100, it becomes 600. So depreciation will at 1. The depreciation for that of November should be on 600. So it should be 600,000 times 2%. That will give us 12,000, right? So thereafter, it will now be 12,000 going out. That is all. Okay, so that is the end of the game. Can you give me profit before tax? Profit before tax. This is what you get for profit before tax. Profit before tax. This is 25,000. I get this one to be 25,000. But the other one is going to be 28,000. They don't do that in exam, so guessing is not good. Okay, so basically that is it. Now give me tax. And let's find profit after tax. Tax will be The tax. Is it 10% per month? Payable 1 month in arrears. So where should I place the tax? I want to get here. Understand this section for me carefully. If the company pays tax at 10% on net profit every month, that's the last footnote. This payment is actually done in the month after the month in which the profit was declared. 1 month in arrears. So 10%, the first one with 10% on this, giving us 2,500. Why should I record it? Will it be in October or will it be in November? Tax being paid 1 year in arrears. But I selected this question because of the tax. I'm asking you how to do the tax when it comes to master budget. Now, friends online, where should I place it? Year 1, October or November? I like that. I like that. In fact, it must be in October. Why? Tax should be in October. Now, we are preparing profit and loss, and it must be in accordance with accounting practice. Now, expenses should be recorded as and when you incur them, not when you pay. The payment will come in if you are doing what you call the cash flow statement or a cash budget or anything that with cash. So it's the payment, but its occurrence or its occurrence needs to be recorded in the month in which you incurred them, and then you accrue this. So tax for P&L calculation or for profit calculation, it might be in the current year, because if you get in the current year or the current period, so you have to the same 2,500 average, but the payment, that one you last. Don't forget that the NPV calculation where taxes were held in arrears, we left it because NPV deal with cash flow. This one deal with profit. Profit expenses must be recorded as when you incur them, not when you pay. Cash flow expenses should be recorded as when you pay, not when you incur them. That's a two different things altogether. Here to be 2,800. Can you find the profit after that for me? I space this as I find it for me, and then let me move on to the next one. I will quickly move on or quickly get this question. Good. So first one be 22,500. Second one would also be 22,500. The last one will be 25,200. That's the profit after tax. We are done with this particular section, the first phase. Let me go ahead and do the second phase. And then the third phase for us to bring master budget to a successful end. There's one terrible master budget question. I'll let you know, and then you go and try that one for me, and you're fine. Now, there's the issue here. The next question says you should prepare the budgeted statement of financial position. I would want the cash budget, you cannot prepare it. So leave enough space for the financial position. Now prepare the cash budget first. I'll prepare the cash budget second before the financial position. Because when I go to the current asset, I need a cash balance. It must be from where? The cash budget. How do you get it? So I will leave a space and go and prepare the cash budget first before I come back again. Okay. Now I need certain figures over here which I'm preparing the cash budget. So let me take them. If I mention them, give it to me straightforward. First figure that I'll ask you to pay to these purchases. So take note of the purchases. I'll call for this renter. I'll call for this, and I'll call for that, and I'll call for the tax too. So 1, 2, 3, 4, 5. So 5 items I'll call for them in the cash budget. So let's start with the cash budget. This is how good master budget is. We work a full or first section, no workings. Good. Okay, so quickly as the board and start with the cash budget. Again, for cash budget, the same show. So let me just clean this one and tell the examiner cash budget. I am doing the C, cash budget. Cash budget. For cash budget, as we explained the last or the previous time, we start with the receipts. Quickly, all the receipts. Yeah, what are the receipts? Cash received from customers. So cash received from customers. Yeah, then amount they've received during the year, cash received from customers. In fact, they've received rental income received. They told us like 25,000 each month. So I'll record that one first before I continue. The easy ones. Please, this cash budget is not easy to be determined. Sorry, this cash received from customers. Do all the easy straightforward. The one that's not required what workings first before you go to the workings. So before I start providing workings, I have the easiest one on the page first before I move on. The next one, they mentioned loan. They say they're going to receive some loan. Loan received. Let's go to the one that there will be a loan. A loan of 80,000 to 6. The company plans to borrow 80,000 from the director. The mortgage is payable in a year's time without interest. So this is interest-free loan, right? 80,000 in November, so that's November 80. That's immediately my first working on the list. So first workings. I'm looking for cash received. Cash was received from customers. I'll go to October. I'll go to November, and finally land myself on what? December. How do you get it? Now, for those of you that cash flow, IAS before, is the same over there. Anytime you're looking for something received or something paid, relax, tell the examiner. I need to know that item. Cash received is in connection with the debtors or receivable. So bring what you call the debtors figure. Bring the open balance. The balance background, debtors figure, the open balance. Then add your credit sales to it. Add credit sales, or if there's no credit sales, pick what total sales. Then less the closing balance. That is all. Anytime you're looking for anything paid, anything received, three steps. Number one, add your open balance. Number two, add item. Number three, less the closing balance. You are done. Let's go to this question and see if we can get all these facts from the question, and then we move on. So balance carry down. Okay, so let's go to the question. Open balance of debtors. So the first period, that we show us. So debtors is 25. Can you check this from the last figure? That one is 30. The last figure is 30. On pay tax is 3,000. And then data happens to be 25. So data open balance 25 here. Okay, so let's pick the closing balances from the person. The closing balances for debtors, they are 15, 30, and 15, right? 15, 30, 15. So closing balance is 15, 30, and another 15 again. Now, let's record the sales. Sales was 200,000 here, if my memory was set to me correct. There is 240. Good. That is what? 300,000. I'm in trouble. Let me step him down. Now, closing balance for that of October, we are less no. We open balance for November, so here should be 15,000 as open. Here we are less, it must be open 30,000 here. Here we are lesson. So basically, what's the cash received? So cash received will be. So cash received 210,000. I'm recorded here. Let us examine now. Workings number 1. The same as 210 here. It happens to be 225,000. So 225,000. That was a recording here. 225,000. Okay, so final one will be 315,000. So it should be 315,000. It will be 315,000. Okay, so basically we are done with the cash received. What are we on financial reporting? And then ISM, statement of cash flow, looking for cash received or cash paid, tax paid, interest paid, anything paid, anything received. This is our approach. Anything paid, anything received, pay balance of that item, add that item to it. That is the closing balance. You are done. You get the close. You get the paid version or the movement in cash. Let's quickly go to the payment. We are done with the receipt. We are done with the receipt. So let's go to payments. So can you find the total for me? Call it total receipts. So this one is 135,000. Impossible. Okay, so basically, let's go. But I'm taking this section off. Go to payments. Payments. So let's align the payment. Separated, right? August and 340. Okay, so basically I'm done with this. Let's go. Payment to start with a cash paid. All right, and it's in there. Copy the easy ones. Is there anything that wants to pay? Let's go all the payment, the free payments. The first on the list, they are going to pay the operating expenses paid. So can you record the admin, the selling distribution and admin costs? So let's record them from our P&L. So selling and distribution costs. We had 50,000 for the first one. We had 60,000 for the second one. We had 75,000 for the third month. What's the admin? Admin to, in fact, admin, we have 20,000 here, we have 24,000 here, and we have 20,000 here. So leave the cash pay there. Don't do any earnings for now. Copy all the easy ones. When they are done comfortably, and you come back. By the time you get this easy one, get ready to stop. Done something. Than to leave this easy one and go and fight over the difficult one. Some of the footnotes or some of the issues are trapped. And extra conditioning, in fact, you might not be able to digest it very well. So kindly do the easy ones. Now let's go. Another easy one, they're going to buy assets. So fixed assets, acquisition of fixed assets in November. So they're going to buy fixed assets in November. The cost is 100,000. I will record all the easy ones before dash. Again, they have to pay tax. Don't forget that if you check all operating expenses, they have to pay all the operating expenses, but they will not pay the depreciation on cash item. All these operating expenses should be to be excluded from where? Non-cash items. So let's add tax. So tax paid. Now, tax paid will be month one, tax be paid in month two, because tax paid in 1 year in arrears. Sorry, 1 month in arrears. So September tax be paid in when? October. October tax be paid in November, and November tax be paid in when? December. If you want to know the September tax paid or the tax liability as at the end of September, which will be paid in October, go to the September balances you see there. So let's go. September balance. Unpaid tax is 3,000. So unpaid tax will be paid in here 3,000. Again, October tax, go to the P&L, the one that we just finished. October tax stated there is what? 2,500. To be paid in when? November. So 2,500. What is November income tax expense? November is 2,500. To be paid in when? December. So now I want it. Now, what about December tax, which is 2,800? To be paid in when? January. We don't need January. We have to end up with December. So we are done. These are the easy ones. In fact, if I add all, that is all for the total payment. So even if I might not be able to calculate, if I might not be able to calculate the cash paid, at least I might get something in there. So I'll tell the examiner total payment. If I know that time is going, I'll put my date of birth there, 1935. So 1935. I put my date of birth there, 1935. I'm done. But the best date that you like, or the best dates that you are familiar with is what your date of birth. So can you put it there? Don't leave it empty. Good. So that is it. Okay, but let's do workings for those who want to score 20 over 20. Let's go and do the workings, okay? But for us that we are looking for 10 pass, let's look at this. Now the workings will be cash paid, follow the same rule. Cash paid, follow the same rule. What is the rule for? Let me do that one here small. I'll do October here and November. December, you do it for me. Because the space, okay. Unless then the camera down again. Let me do October here, November and December. If you're looking for cash paid, don't forget the rule. Anything paid, what's the rule? Open balance of that item, add that item to it, that's what? The closing balance. Cash paid, who are you paying to? Supplier. Suppliers are who? Your creditors. So check the open balance. So here should be cash paid. Workings number 2. So balance brought down. Suppliers balance brought down. So creditors. Let's go and take the September balance, which will be the open balance for the last 30,000, right? So 30,000. So you'll be 30. Let's go to November. Follow me to the camera here. I'll bring the camera back. After the calculation, I'll bring the camera back. Okay, then November, here I'll add purchases after the open balance purchases. After the open balance purchases, so balance brought down. So balance brought down. Add your purchases. So go less your closing balance. Purchases we have in there. We had 122 from our P&L calculation. 139,000 and 190,000, right? These are the purchases figure. Can you compare from the P&L? Get a closing balance for the creditors. Let's go. Let's pick the closing balance of the creditors. Closing balance of creditors are going to be the last figures 25,000, 2028. Average 25, 2028. So 25,000, 2028. In fact, what happened is this. I'm working in thousand. Please write the answers in full. I guess it's too small, don't write in thousand. So here we have 30. Here we have 25, 2028. So you can see, well, I write it in full. Closing balance must subtract. And the closing balance here, it must move to be open. For purchases, we know it will be 122, 139, and 190. Closing balance here becomes what? Opening balance the next period. So it should be 25. It should be 20. Put all of them together, and now you are done. So 30 plus 122, that's 152. Plus 25, that'll be 7. So that gives us 127, right? That's the cash paid. So 144, 182. So basically, that is the game. Basically. Let's go and put them in, and then we are done with the cash budget. So that will be 127,000, working number 2, 144,000. Please, you've seen cash budget on its own. Our previous example that we taken was a cash budget on its own. This is 182,000. Okay, so basically, what is the total payments? So let me bring back the camera in here. Let's go. Okay, good. So basically, that is it. So adding all these, just something like 200,000. Okay. Okay, putting all this together, get something like this will be 330,500. The last one will be so 289,500. Basically, that is the end of the game. Then the next line, I want to do it on top. Packages is not great. Let me do it on top. Okay. I'll clean this side small and do it here. Now the next one, the next line is right here, surplus slash what? Deficit. Surplus like deficit. Right here balance brought down. Right here balance carry down. And then we are done with the game. So can you take the total receipts minus the total payments? So that should give us surplus of 35,000 for the first month. Agreed. Continuation. Come here. Receipt of 330,000 minus a payment of 330,000. That should give us a deficit of 500. Agreed. Finally, 340,000 of receipts less 289,500 of payment, and that gives 50,500. So I put it here. If I want to get the open balance, let me go to the person and pick the first cash balance, the cash balance for the previous month. So it should be cash balance expected 80,000. What if they say bank overdraft or it's in deficit? You put this in brackets. So here's 80,000 along the line. This will give us something like 115,000. Agreed. When I come here, I'll push it as open. So closing for September, October, it becomes open 115,000. add it to this, I get 114,500 because this one is deficit. Again, finally, I'll put it in here and I'll get 114,500. If I add these two together, I get a huge figure. So 165,000. Good. So 165,000. So this is the cash balances. So if you compare the financial position, the budgeted statement of financial position, this will be the cash budget. So this is the cash balances. Goes to the statement of financial position as your cash balance before your financial position will balance. Basically, that is it. Okay, let's quickly go to the financial position to complete the game. Right, if you have any question, can I ask before we move on to the financial position to complete the game? Now, in financial position, when it is I hope you bring the balances for me. Let's know the financial position. Financial position, probably known as what? Balance sheet. It's just a sheet of paper that records all closing balances. It does not include any consumption. No consumption goes towards profit or loss. Okay. So we now go to the B. Go to the B. Outside on top, B. Let's start right here, Chobo Limited. Chobo Limited. Third examiner. Mr. Examiner, this is budgeted statement of financial position as no shortcut. Yes, no shortcut. As at the end of October, November, and December. Putting all this together, we have what we call our reporting currency, reporting Ghanaian cedis. When we start from financial position, all assets one side must be equal to equity plus your liabilities, basically. Let's start the asset, credit to futures, fixed assets, and what? Recurrent assets. There is not called a fixed asset, but in recent times you will see what? Non-current assets. Good. Right here, the fixed assets. Fixed assets, I'll put here cost. I'll put here accumulated depreciation and put here net book value. Their cost is 500,000. Agreed. In November, they acquired 100,000. I like that. 600. Very good. November, the first one. I like that. Let's go and pick the accumulated depreciation. Now, the accumulated depreciation is 120 from the question. Now, 120, they add a depreciation charge for that month to it. Already we have 120. October, we charge what? October, we charge 10,000. So now you got 130. So here should be 130,000. I'll put it in bracket. First of November, we charge what? 12,000. So that should give me 142. Agreed. Good. So 142,000. For that of next month, we charge 12,000. That should give me 54, right? So 154. And here will be 154,000. So therefore, what's the net book value? 500 minus 130. So that gives us 370,000, right? But again, friends of mine. So 600 minus the 142. 485,000. So 485,000. Then finally, what we get finally? The December, month of December. 446,000. I'll take that. Okay, so basically that is it. So we can move on. Now let's go to current assets. Current assets. So current assets. Underline it and start from your inventory. In fact, they call it stock. Let's call it stock, okay? So stock, pick the closing stock. The closing inventory. In fact, November is 458, 458. Okay, it's true. Not 485, 458. Thank you. Okay, so stock. Pick the closing stock. The closing stock is in the question. So let's quickly pick in them. So the stocks are here 2015, 25. So 20,000, 15,000, and 25,000. I'll pick debtors. What are the debtors figure? The closing balances for debtors. Debtors will be that the 15, 30, 15. So 15, 30, 15. Let's go. 30, 15. Okay, so basically, let's see. You go to your cash balance. Cash balance. Cash balance will be. Now, bring the cash balances that we had from the calculation. In fact, we had the cash. So the cash budget that we prepare will produce the cash balances. So 115,000, then 114,500. 114, in fact, say to not come move. 114,500. The last one is 165,000. So can you get it from total then the total assets? So that's right here, total assets. So total assets will be so adding all this, 520,000, right? This is 130. Good. So 520,000. That one line is 617,500. 617,500. And finally, we have 600. But more than 600. 370 something in here. 600. Okay, so get 651,000 cities. So that is the end of the first half. Let's quickly balance it off. You go to equity. An equity section, you start with stated capital. The stated was or capital employed. Also called capital employed. However, the open balance will not be given to you. The examiner expects you to use what you call statement of what affairs, which is same as the financial position at the beginning date. financial position at what the beginning date or the financial position at the previous date. So over here, just pick only the open balances. That is all. Only what? The open balances. Don't pick any balance for any month. So open balance will be only for September. And you know the balancing figure. Asset is equal to equity plus liability. Make equity the subject. Equity will be equal to all assets minus liability. That is all. So all assets one side, all liability one side. This year no demarcation. Don't say, oh, fixed asset one side, current asset one side. List all the assets together. Let's start again. Only from the previous balance. That is all. So we start. It's an asset, then add. I'll start from the first asset, fixed assets. I'll add. Depreciation, I'll subtract from the fixed assets, right? So 380. So 380. So then we put some small notes here. So it will be 380. The first item on the list is an asset, positive figure. Can you show the working you and add it for you? Mark it for you. Stock is an asset, right? 18,000 stock. So plus 18. Next item on the list. Item bank balances. That is 80,000. Cash balances 80. And next item on the list. Cash expected, sorry, unpaid taxes. That is liability 3. Unpaid tax liability, which is 3. And then the next one happens to be debt is 25,000. Debt figure is what? 25,000. Debt has to be positive. It's an asset, right? Okay. Or if you like, can add all the assets before the liability comes down. And credit is 30,000. Credit is 30,000. So credit is 30,000. So I'll subtract. That is all. Any answer for me? 503. Good. Depreciation is 120. Yes. I've already subtracted from the fixed asset. So I had a 380. Asset is 503. Okay. So if I should add all together, so finance is 503 Ghana cedis, right? So to be 1,380 plus 18 plus 80 minus 3 plus 25 plus 30. 470. Okay, so to look at the 503 is the total assets. So that will give 470. So that is the capital 470. So 470. Yeah, that would be our capital. However, there's an issue here. The issue is here the retained earnings has been added to this. The retained earnings has been added. So here you just need to disclose the profit for the year. The profit for the year, the retained earnings added. Okay. Now to go over, we are looking for that of the utility capital. Now, which is the difference between all assets? To add all assets, we had 503 less all liability 33 to get what 470. That's the total equity. How we get it? That is the total equity. So that will be 470. However, they're supposed to give us what you call retained earnings, so that we will be adding the retained earnings separately. So then it means that the retained earnings is in this capital. If the retained earnings in the capital, don't worry, record it. so that we will not show retained earnings here. So this 470 is composition of what? Retained earnings and what? The stated capital. Even though I've called it stated capital here, I'll call it together with the retained earnings. So here, write profit for the period. Profit for the period. So profit for the period. And then record the profit. And get a closing balance of the capital. The closing balance of the stated capital. So tell them now. Closing balance for the stated capital. Okay, so what's the profit made? That's the profit after tax. For that of profit after tax for that of October. We have 22,500 agreed. When I add this together, I get a closing balance of 492,500. This becomes open balance for where? This particular year. So open balance becomes 492,500. Profit for the year was the same, 22,500. Putting this together, what do you get? How do you get it? You add a profit to it, then now can you go through Buffer Limited, November 2015? It's in one of the lecture videos. That one, the retained earnings was given to us. Look at that one. It's slightly different from this in terms of the equity. That one, retained earnings was given. This one, there's no retained earnings. So no, when retained earnings is given, how we calculate the one is not given, how probably move around it. So putting these two together, that's something like 515,000. And finally, push it in to the final year, or final month. This year's a month then. And last month profit, we have 25,200. Add and let's get the closing balance. $540,200. So 540,200. Okay, I want to continue from here, but there's no space. Let me clean the top. That's it. I'll clean just the top here and start between it there. Right from this, we just pick and next question on flexible budgets. I'm saying budget. Okay, so let's quickly look at this from the good liabilities. So list all the liabilities. The first on the list is creditors. Creditors. So the creditors will be, let's go to the creditors balance, the closing balance. The creditors closing balance will be last figure 25, 20, 28. So 25, 20, 28. Let's see, 25. How can I know? That one I can see clearly. So if you can see it, let's do this way. So that one is 25. Can you get some down? 28. Okay, so 25, 28. 25, 20, 28. Okay. Let's go to the next type of liability, the tax, and then the loan, the tax owing. Here will be 2,500, the same 2,500, and then 2,800. But then come to the loan. Now pick the loan. A loan of 80,000 in November. A loan of 80,000 in November. So can you get me total equity and liabilities? Total equity and liabilities. So total equity and what? Liabilities. Total equity and liabilities. Total equity and liabilities. So total equity and liabilities. Let's see. So total equity and liabilities. On to shortcut it and then move on quickly. So now that they put it all together, total equity and liability 520,000, and then that of the next month will be okay. So total equity and liability. Adding from this section, this very one, plus all this, great. Can you balance the remaining ones like this and then you move on? That is a master budget, a complete master budget. So you'll be 515. If I should put them in here, 540,000. No, not that green. So I'm watching here, sorry. That I should watch here. 617,500. 651,000. Agree. So basically that is it. Now let me scan through the many ones for you to go through them for me. The next question that you are doing, in which all of them the videos are available. They are. The very next question is called ABI. It's a cash budget. ABI is a cash budget. Try that one for me. And then we move on. The last one is not the same. The difference, the last month, you need to put 80,000. The guy is going the loan. That's all. So the guy is still owing the loan. That will give us that amount. And so you put the loan there. You have not paid. You pay it a year later, so it must still be there on the balance sheet showing the amount on it. So that's all. I thought it was in one and add it to it. Let's continue our scanning. Okay, so to ensure a successful examination passing well, scan through the specialist in there. Can check how the sales commission, how we calculate the sales commission. What I can do is see what we are not doing. And I look up for okay, so basically that look at it for me, then you know, it's a pure calculating. You do the question for 4 million publication, not for an publication company. Got that one also for me nicely. This is about cash budgets, and then you advise use of cash. We didn't look at the uses of cash budgets and the interpretation of cash budgets. You may be asked after the preparation of the cash budget, provide the uses, explain 4 benefits of cash budgets. Now, cash budgets will help you to know your assets, liquidity situation, your liquidity. Number 2, it helps you to know your investment potential. So an amount free cash out will have to be invested Cash budget will help you to know the amount of overdraft that you need to secure in the future period. How we get it? Cash budget will let you know the limits or the constraint on cash as to when to buy assets and when not to buy assets. We have a cash budget. Because you don't have free cash, you can buy assets. How we get? So this is the good news of our cash budget. Now the interpretation. Interpretation, I think it's one of the cash budgets. So go through. Let me turn to question 5. KK Limited. Still a cash budget that has also been solved. KK Limited cash budget has also been solved. Usually state 2 the merit of cash budget, disadvantage of cash budget. Third examiner. Anytime examiner asks you bad news about budget, tell him that budgets are estimated, they are forecast, they are expectation. Don't forget expectation cannot be what? Sometimes do the same as the actual, so it can differ from the actual cash flow. I'm sure in 2019, a lot of people prepare their cash budgets nicely, but with the help of COVID changed things. So to the merit of it. Good. So that is it. And it's limited to what risks and uncertainties. So in trade where there are uncertainty of cash flows, cash budget becomes irrelevant. You yourself know that you can receive money at any time, you can pay money at any time. Payment and receipt of money or cash is not in a certain pattern that you can easily predict. In that situation, cash budget becomes what? Irrelevant. Whatever is what you think. In actual fact, almost every day things are changing in your organization. Question 6, another interesting question. So after powerful, you can also nicely just go through cash budget, management, and then reconciliation of a 12-month period. And then question 7, new limited. In fact, new limited, the solution is in there. This is similar. New limited manufacturer people that call similar. Certainly, and that's November 2014. It's about functional budget. So you prepare the functional budget for October. Wow, our functional budget of October. The last one that we saw was for October. Wow, that's good news. Sales in quantity and value, production quantities, materialization, and material basis in quantity. Explain the principal budget factor as used in budgeting control and give 3 examples of what? From financial institution. What is principal budget factor? If you go through the previous lecture on the functional budget, we explained that with the principal budget factor, it's just the same as constraints or limiting factor. So any resource that plays a challenge on organization's activity is a limiting factor. In budgeting, you need to budget on your weak points first. If you know that you can only produce 30,000 or 30 units of your product, then the budget must be based on what you can produce. So always budget on your limits or your weak points first. And this then referred to as principal budget factor. So third example, principal budget factor is a factor or a resource that plays challenge on organization's objective. In other words, the resources that can have limited supply and therefore might not help the organization to achieve its objective. Examples include production hours, machines, labor, sales, purchases. That is all. So you need to start from that one first. So if you take a trading company, let's take manufacturer. Manufacturer will lack raw material, production machine, advanced technology, labor, and then sales. If you take a training company, sales, and then the other section. Now, this examiner is asking for a financial institution. So, for a financial institution, what will be their principal budget factor? Their limits. Number one, customers. Number two, technology. Capital banking. So, if you are to a traditional way of banking, where customers have to now move all the way from the office, move through busy traffic in town before they get to your banking or late, but you lose. Again, banking location is very key. Banks normally are situated where they can get enough traffic. And then I'll also talk about facility. If I know that my facility or my system can only serve 50 customers this particular period, even if I invite 1,000 customers, my system, my facility will only serve 50, the rest have to go back. So that's why I say identify your challenge and you start with that side first. That is all. We are done. Now, hey, try. Also be solved well. It's a functional budget, very interesting one, and also be solved. Now, what you have to try for me, I'm very happy to question 9, cash point limited. Question 9 is the cash point limited. The management of cash point have prepared functional budget for 2014. The management accountant has gathered the following from the preparation of the cash budget master budget. So this is the master budget question. Thanks for preparing monthly cash budgets. Second, budget income statement for the entire 2014. Finally, budgeted financial position for the entire after the December 2014 for the entire year. That is all. So this one, try it. Everything is a bit different from what you've done, right? But the same cash budget. That one, the cash budget came first before the income statement, and finally the financial position going for 27 marks. And then try this one, and then you'll be fine. Just do the line by line item. As you can see per month there. Just that the only thing is monthly cash budget. This cash budget you have to do for January, February, up to December. It's a monthly. So this one, I don't know how you are going to present it on your answer booklet. So this one, you can turn it landscape and maybe or combine double sheets together. First 6 months, here in the next 6 months, and then you continue like that double sheet. We are going to do for how many months? We're going to do for 12 solid months, January up to December. January up to December, 12 solid months. So take note of that. Can you go to let me know your response about it? Unfortunately, this has not been solved. Okay. Question number 10, solved one, Buffer Limited. Buffer Limited. Limited retails fertilizer to farmers in Ghana. The company has approached its market to provide funding for the next year's operation. And 3-month master budget has been requested for review by the bank. So if we go, it's in there, budgeted income statement for 3 months, financial position and cash budget, all going for 20,000 marks. Yeah. This particular one, can you continue the game for me? Don't any you continue. Question has been solved recently. Zero-based budget the steps also in there. Question 13 also been solved. That is Abigail a champion. This is November 2017 cash budgets. Go through these cash budgets and you are taking your time. Question 14. So theory, you go through that for me. Question 14. Question 14 chapter 2. This is a B. The B is in there. Questions. Question 15 is a flexible budget. So I will explain the preparation of flexible budget, then we move on. I'll give you the principle behind and then move on to the standard cost and variance analysis. So basically, that is it. So let's move on to flexible budget. How to flex the budget. That's the last aspect of budgeting, the preparation. Flexible budget. Flexible budget. Flexible budget. Let's go. I just write some few points on it, and then you have to complete this class, and that will be the end of budgets. Okay, flexible budget. Flexible budget. I will explain issue here. Now, when we talk about flexible budget, it's a budget that can be flexed, or budgets have been flexed to suit the current condition. Let's assume that you have your original budget. Your original budget states that in the year 2020, you are going to sell sales units and production units. So sales and production units 2006. The costs are as follows. So the cost based on production of 2000 direct material is 40,000 cedis. Direct labor 25,000 cedis. And then your variable production overhead is 60,000 cedis. Your administrative fixed production overhead, that one is 50,000 cedis. Now, all these costs are based on what? The assumption that they are going to produce 2,000. Let's see the actual. Let's assume that the actual situation, 2020, what happened? You prepared this budget in 2019, where there's no sign of what? COVID. Now, in 2020, the actual, assume that you produce food to, let's say, the hotels, and then most of the hotels were shut down even before the entire lockdown. So the production and sales were just 500, even for the first month. The rest didn't have any sales. Like there's something what happened here. You have budgeted to sell 2,000, produce and sell 2,000. You actually produce and sold 500. What happened is this. The costs are here. If we don't reflect the current situation in our budgets, we might assume wrongly. We might tell the examiner that there's a variance of 1,500 adverse. This is a very critical or crucial. How can you budget the whole year and you achieve only 500 out of 2,000? It will be a very terrible performance. However, the circumstance or the environment or the cost of this adverse, it is not under management control. So it will not be fair if we don't incorporate the impact. So let's bring COVID in. So let's prepare another budget called a flex budget or a revised budget. So-called revised budget. Let's revise the original budget to suit the current situation. Certain conditions at the time that we have prepared the budget, they were not there. But right after the preparation, they have caused the original budget impossible to be achieved or performed. So what do? We need to flex the budget or revise the original budget to suit the current situation. So third examiner, Mr. Examiner, flexible or revised budgets, they are the budget I will prepare to reflect the current condition, to take current condition into what? Consideration. That is all. It is the budget, it shows how the original budget will be in a current situation. That is all. How do you flex it? Let me give you the rule. The rules are only 2.5. First rule, we only flex variable cost. We only flex what? Variable cost. So rule number 1, we only flex variable cost. So rule 1, rule for flexible. So before I will compare, I'll come to that. Let me fill in this column. Let us know this one is 1,500, 2,000, 3,000, and 6,000. Okay, so rule 1, we only flex what? The variable cost. So if I'm putting a flexible budget here, I'll tell the examiner, this is at 2,000, right? So let's prepare at 500. Now the rules, let me list the rule for you, okay? Rule number 1, tell the examiner, we only flex what? Variable cost. We don't flex fixed cost, that's the rule 2. Do not flex what? Fixed cost. Fixed cost is fixed. Whether covered or there's no coverage, so long as you are living your premises, you're paying the rent. That is all. So fixed cost need not be what? Flexed. Rule number 3, if there is semi-variable cost, semi-variable cost, a cost which is partly fixed and partly what? Variable. Kindly use the method of high and low method. Use the method of what? High and low, or the technique of high and low, to separate the variable cost from where? The fixed. Because semi-variable cost comprised of what? Variable and fixed. And as you know, that we don't what? Flex fixed cost. We only flex what? Variable cost. So we need to do that. Have you get it? Good. So these are the 3 strong rules for flexible budget. So I'll start flexing it for you to see how. And then I'll try and see if I can get some little questions on the semi-variable. And then that is all for flexible budgets. Before you can compare it with what? The original budget, or the actual. So it is haram or taboo to compare the original budget to actual. Well, you know that things has changed. Things has called original budget impossible to perform. How can it come that way? Other than that, you might not be fair to the manager in question. So here is the production manager that is going to answer. Production and sales manager. Now the sales manager will throw it to the production manager that me, I receive only 500, and me too, I told the 500. So the question will be on production manager. Come and answer this question. Why did you produce only 500? Then you also throw it to COVID. Good. So that is it. So let's see. Now, you can express as a percentage. Kindly pick the actual units. Everything here is 2,000, right? I can express it as a percentage. So 500 over 2,000 will give me. If you express as a percentage, it's so easy, so nice, so interesting, so fast, so simple. You move fast than to use the unit. So to be flexible budget, it will be 500 divided by 2,000 times 100. That will give us that should give us 20% or 25%. That is 25%, right? Friends online. Yeah. Okay, so 25%. So that means we are flexing at what? 25%. That is all. Okay, so what happened is meaning that all those variable costs are my take what? 25%. All the variable costs take about 25%. That is all. So direct material 40,000. Now take 25% of what? 40,000. What will be the answer? So 25% of 40,000 should give us something like. So now I'll get 10,000 cities. So direct material here, it comes out to 10,000. However, you can also pick the 500 divided by 2,000 and multiply by what? Multiply by that of the 40,000 here. It will give me the same answer. But this one's a long approach. If you have the percentage, just take the percentage out of it and then move on. That's why we easily get it at percentage. So we have taken at 25, which represents 500. Okay, let's go. About what? 25% of 25,000. So that should give us 6,250. Agreed. 25% of labor. Agreed. So 6,250. Agreed. Please, the flex should be on the original budget, not the actual. You are flexing the original budget. Original budget. Okay. What about the labor? Labor is right there. Let's go to variable production overhead. Variable production overhead. Variable production overhead. So that will be 25% on 60,000. What do we get? 15,000. Good. Sorry. 15,000. Now, when you go to the fixed production overhead, once you've established that this is a fixed cost, please carry it in. 50,000. Don't flex the fixed cost. That is all. Okay. Kindly flex it at 60% for me. Let's go. 60%. You are flexing at what? 60%. Tell me the unit first. Tell me the material, and then, in fact, for fixed production overhead, you can start that one first. It might be 50 to flex fixed cost. Agree. Right from here, I'll walk you through how to flex semi-variable cost, and then we look at some few techniques, and that's all for flexible budgets. That is all. And I will put through some few questions and where it started from, that we move on. So can you produce the figures for me? So 60% of it is 2,000, right? 60% of it will be 1,200. 1,200. That is 60% of it. Okay. 60% of 40,000 give us 24,000, right? %60 of 25 will be 15,000. Okay. 60% of, let's say, 60,000. That's give us 36,000, right? That is all. Now I'm going to move into deeper waters. What I've done is just an empty game. Let's move into deeper waters. Assuming this is 100%, always look at 100%. Now, assuming that 100% is not given to you, this one is not there. Can you flex for me? Flex at 80%. Wow, trouble. Have you seen? I've been original, so now flex for me with the help of these two. They'll give you two. So with the help of these two, can you flex for me? If you're able to get this one correct, I'll move on to semi-variable costs, how to do that, and then we move on and make the last two a successful and okay, so what do you get? What do you use? We are flexing at 80%. And listen, we don't have the original 2,000 here, that we find 80% of 2,000 and put it in. We can't find it. What we do? Don't worry. But we have 60% here. We have 25% here. Pick any of them. Pick what? Any of them. I'll pick the 60. Okay. Now, if 60 is equal to 1,200, 80 will do what? That's all. If 60% is equal to what? 1,200 units, then 80 will be equal to what? Question mark. I don't know. That is all. So if 60 is equal to this, now the why is that they put? They give us two. I will explain. They give us two to know the first cost. The one which is the same is the first cost. That is all. Okay, so here let's start. So in short, if you don't see the 100%, don't take just 80% of this and come and put it there. No, this is not 100%. You don't get the answer. So in short, tell the examiner to get the 80%, pick what you want. I want 80%. These are working, so divided by what you have. I have 60% here. Times the amount, which is 1,200. It will give it to you. That is all. Pick what you want, divide by what you have, times the value you have. That is all. That is if you are flexing and it's not 100%. Good. So let's perform the working example and make the answer in. That's 1,600. Perfect one, I'll take that. Which is the same as the original one, or 100% was 2,000 units. If I find 2,000, 80% on 2,000, I get what? 1,006. But the examiner will not give you the 100% for you to find just 80% on this. If you come and find 80% of 1,002 off track, take note to Now let's see something. So if you want to get direct materials to the same thing, I'll pick 60. Before I go to that one, let's do something. Flex it on this and let me see. So here too, I need 80%, but I need 25% times what I have 500. This answer is going to give us the same 1,006. The same 1,006. Perfect one, which is 1,006. So any of them must give you the same answer. Let me tell you the secret. In exams, if you do this, and this one happens to give you, let's say, 800, immediately tell the examiner this particular cost is called semi-variable cost. And you use high and low. I'll set a question like that right now for you to look at it. How do you get it? Good. So basically, so any of them to give you correct answer. So let's go to material. The cost is 24, but the percentage is 60. But I want 80 out of the 60. So tell the examiner 80 over times 24,000. That will be the workings. What do you get? 32,000. Perfect one. That will be 32,000, which is the same. The original was 40,000 times 80, right? But here the original will not be given to you. Here is because you know the original. That is why we can confirm the answer. The exam don't know the original. When it's setting the question, I've written how we create the original. I'll clean it. So the exam we see the original. Okay. Let's go to labor. The same thing. So can you produce them for me? Labor will be 80 out of 60 times what? 15,000. And I'll give us 20,000. Perfect one. Fixed production of light. Sorry. Variable production of light. So sorry. It's 36,000. Variable production of light. Let's go to that one. 48. Perfect. And last one, fixed production of light. Third examiner. We don't fix what? Fixed cost. So they just carry it as it is. Put it inside like this. Fixed production by why 50,000. Perfect one. 50,000. Okay. Now I'll give you 3 strong questions. So far, we've set 3 strong questions on this. PSA 1 in PSA and 2 in management accounting. I walk you through one. Okay, so that is it. Now I'll walk you through semi-variable, how to flex semi-variable cost. Okay, so let's start again. We don't flex fixed cost. We only flex what? Variable cost. But semi-variable comprise of two. So kindly do the demarcation well, and then that's all. Let's go. So we are moving into what? Deeper waters. Don't mind me, okay? What I'm going to do, I'll make it small. I'll make the question inside small. Let's assume that the here is $20,000. This is the unit, sales and production unit. This is May, month May, and this is June. Yes, 25,000 units. Okay. Material cost, labor cost, and then I write here production. Wow, overhead. And right here, admin, I'm not got plenty, I'm done. Only 3, only 4, I'm done, I'm not got plenty. Because late. Let's see, material. Let's say here is in Ghana cities. Okay, so from here coming is in cities down there. Let us know here is around 40,000 cities. 40,000 cities. Good. And as now here is 50,000 cities. Labor. Okay, so here to be 50,000 cities. Here to be 62,500. Now, this one, let's do something. Let us know here is 70,000. Wow. This is 85,000 cities. I'm done. Admin is 35,000 and 35,000. Required. Flex this above budget. The examiner will not make things look easy like this. He will tell you that, he will tell you that they started. In fact, he will give stories surrounding this. What's cost for the flexible or the revision or the adjustment? About it, realize that you cannot achieve it, something happened. In fact, if COVID will not be the amount, but will bring COVID inside the version for you. Something that will cause what? Catastrophe, natural disaster, something that goes beyond management control or international crisis. You budget and realize that international prices have dropped drastically. You don't have control of international price. That's all required. I am just assuming they represent 80% of activity. Okay. This represents 80% of the activity. In fact, I'm in for business. I'll do something. 80%. Okay. 80%. So 80%. Okay. Yeah, this represents 80%. Okay, sorry. This represents 75%. Okay. Coming in. I want to do something. I want to make it a bit interesting. A little. 75 divided by 75 divided by okay. Let's do something here. 100 divided by 75. That gives us 1, 2, 3, 3, 3, 3, 3, 3, 3, 23. Okay, I'm coming over. I just want to be a bit of, gosh, this question is going to blow your mind. Yes, be 62.5. 62.5. 62.5. So 62.5 here should be 62.5. Let us assume that here is 50%. Here's 50%. That is all. Okay, in fact, so start work. Okay, flex the above, flex the above budget at what? At least 85%, or there's another with the unit. So 85.85 times certain answer. That's 34,000 units, or 34,000 units. Now, I'll solve this question paying maximum attention to 34,000 units, and then ignore the percentage. Yeah, that's in November 2019, and yes, there's another use percentage. A certain year, there's another use units. But in this question, I'm combining percentage and units together, so that they are the same. Okay, so let's start. Flexible budget. Let's first prepare the flexible budget here. So I write here flexible budget. Let's start. They say I should flex it out for 34,000 units. That's all. So in short, I need to find the cost per unit. So what will the material cost? Material here is 40,000 when they produce 20,000. It's 50,000 when they produce 25. So what's the material cost per unit? So pick the calculator, confirm. 40,000, that will be 40, 1, 2, 3, divided by 20, 1, 2, 3. That will be 2 cities, right? So that is 2 cities. Confirm here too. 50,000 divided by 25 also give us 2. So material is what? 2 Ghana cedis. So automatically multiply 2 cities by the 34,000 units. You get what? The material cost. How we get it? Good. Okay, so here we are flexing at 85%. Now this 85%, I cannot find 85% directly on these items. Where are you? Directly on 40,000 or 50,000, because it's not 100%. You can only find it on it if it is 100%, but there's another information. This is what 50% and this is what 62%. So we cannot find this on it directly. So I'm going to work on the units. Unit price is what 2 Ghana cedis, right? So here we need to find the cost per unit. 40,000 divided by 20,000. That will give us 2 per unit. 50 divided by 25 is 2 per unit, right? So at the end of the day, putting all this together, the unit material cost per unit is what? 2 Ghana cedis. If now we are going to produce 34,000 units, what will be the total material cost? So it will be the 2 cedi times what? 34. That will give us 68,000. So the material cost or the flex or the revised material cost should be what? 68,000 at what? 85 activity level. Now I use the unit. Can you use the activity level to find the formula? Let's see. So can you use the percentage? So percentage, we said that pick what you want. Percentage, you are looking for 85, which is same as 34. So it will be 85% out of what? Pick any of them. Let me pick the 50. Divide by 50 times the 50 value, the amount, 40,000, right? Let's see. Let's take our calculator. So 85 divided by 50 times 40,000, 1, 2, 3. That gives us 68,000 exactly on it. So the examiner will not provide these two at the same time for you. No, you provide one. In recent exams, you normally use the percentage, so take notes. Okay, let's go. I'll go to labor. Labor, I'm getting 50 here. And I'm getting 62,500. So that means, let's drive and see. 50,000 divided by 20. I am getting 2.5. I'm getting 2.5. 62,500 divided by 25,000. So 62.5 divided by 25. I'm also getting 0.25. So that means labor cost is what? 2.5. That's Ghana cedis. So therefore, if I am looking for 34,000, then it must be 34,000 by what? The 0.25, the labor cost per unit. How do you get it? Both. So that will be 2.5 times 34,000. Can you show what you know? Get 85,000. So I put 85,000 here. That is using the unit approach. Now I can't use the percentage. If you don't use the percentage, tell the examiner. As the examiner, the percentage will be like this. I am looking for 85% out of what I'm picking. Let's pick any of them. This one, let's pick this guy. Out of 62.5 times the value. You guys know what? 62,500. Oh, that is on cancel this one, right? 11 lots, 1,000 here. 85 times this will give us 85,000, as you see here. Perfect one. Then you move on. How do you get it? Okay, so that is it. There's I'm not going to provide these two, but that's what I provide the alternative for you. Okay, now go to production overhead. Production overhead. Divide 70 by 20,000 units. What do you get? 70 by 20,000. Let's start. 70,000 divided by 20,000. I'm getting 3.5. Okay, so 3.5. Let me write it here. Divide 85,000 by 25, and let's see where we're getting 3.5. So 85, 1, 2, 3 divided by 3.5. I'm getting answer that I'm getting 3.4, which are not the same. So that means this is called semi-variable cost. It is semi-variable cost. It's what? Semi-variable cost. Let's assume that you're using the percentage to calculate. How do you know? If you're using the percentage, it will be like this. I'll find 85% of this. So 50% times this figure value times 70,000. And compare it with the answer that I'll get here. If I take 85% of 62.5 times this answer to, these two answers should give me the same. figure. But if they are not the same, the meaning that they are what? Semi-variable. If I use a percentage, I have used the unit to test. I've also used what? The percent. These answers will not be the same. That shows that they are what? Semi-variable. How do you treat semi-variable costs? Let's start the game. Use what you call high and low method. Find the variable cost. Step 1. Find what? A variable cost. That's the first step. So step 1, find the variable cost. You find the variable cost high and low from the previous lecture. Look at the highest unit first. What's the highest unit? Yeah, thank God there are only what? 2, May and June. So May and June are the highest. Is the June, 25,000. So I'll come here, right? June is 25. Its cost is what? Equivalent cost is 85. Okay. Look at the lowest unit is 20. Its equivalent cost is 70. And so the formula will be like this. The cost highest, the cost at the highest activity level minus the cost at what? Lowest activity level. So let's do this way. Cost at what? Highest activity level. And then minus cost at what? Lowest activity level. All divided by highest activity level minus lowest activity level. That is all. That's the variable cost. So let's start. It's equal to highest activity level cost will be we have 85,000 in here. Minus the lowest cost is 70,000. Divided by highest unit is 25,000 minus 20,000. What do you get? What's the variable cost in here? So the variable cost is 3 Ghana cedis. Perfect one. 3 cedis. So the variable cost is 3 cedis. Can you find the fixed cost for me? So the variable component is 3 cedis per what? Per unit. So 3 cedis per unit. That's the variable cost component. Using high and low, the next step is to find what? The fixed cost. How do you get the fixed cost? The fixed cost will be like this. Can you look at the high and low? Since it came last sentence, you might have it as a sub, not the main question again. Maybe this is coming certain as a sub includes. So let's get the fixed cost correct. Now, with the fixed cost, pick any of the activity level. I'm going to take this one from there. So can you jot down? The variable cost is 3 Ghana cedis. So let's go. Oh, somebody have found a fixed cost 10,000 furnish. Yes, the fixed cost is 10,000. Fully true. Pick any of the activity level. So let me pick May. If I pick May, how do I find this cost? Total cost is equal to variable plus what? Fixed. So I found the total cost at May. May the total cost is 70. Less total variable cost. How do I get the total variable cost? The variable cost per unit is what? Is 3. So multiply 3 by what? The unit. You get for 60,000 agreed. So 60. So therefore, fixed cost what? Fixed cost will be 10. If I use June, the same answer. June, the total cost is 85. Total cost is 85. Can you multiply 3 by this? 75,000. As total of 10. So the fixed cost is what? 10. That is all. That's how we find. This is high and low method. Good. Let's analyze the game. Okay, so just a few points together. Let me do the calculation. So in short, with this production, I can write a formula like this. The production cost is equal to a fixed cost of 10,000 plus a variable cost of 3. 3 per unit. Unit equivalent to unit X, okay? So that would be the production overhead cost. So any semi-variable cost, the cost formula will be like this: 10,000 the fixed cost plus 3x. So now, if I am selecting at where x is equal to 34,000 units, find me the total cost. X is 34,000 units. So what will be the total cost? So to flex here, let us examine now. Is equal to the fixed cost of 10,000 plus 3 to bracket 34,000, right? Before I add them together, I'll get this. For the 34,000, then I'll add them together. And that'll give us 3 by 34 plus the 10,000. So let's see something in here. So obviously we don't flex variable cost. Sorry, we don't flex fixed cost. This fixed cost, we cannot flex it, we are just adding into it. How we get it? Yes, we are just adding. We are not multiplying by anything. So 34 by 3, that gives us 34 by 3. That's 102 plus the 10,000. Don't flex the fixed cost, just add it straightforward. So written 102,000. So here should be it's 112,000. So 112,000 for that of production overhead. Admin is 35. Fixed, we don't flex fixed cost at the end of the game. I'm done. However, we'll do the last one using what the percentages. I think that I did not use the units to calculate the semi-variable or the history and this 10,000. How do I do it? Assuming this 20,000 units is not there, and you still want to find this 10,000 is 3,000, I'll provide some short illustration because it has appeared before. First, highest identity level 62 and 50, which one is first? Is 62, fine. So it's still 62. What is the cost? The cost will be 85. So to be variable cost is equal to 85,000 minus what is the lowest cost? 70. Over here, it will be 62.5 minus 50. 62.5 minus what? 50. That is all. Now here the variable cost will change. So tell me the variable cost. Here it's per 100. The variable cost is 100%, not that per unit. There's no unit here. So don't come and try this per unit per this. This time is per 100. So the unit is not there, and you are not dealing with what semi-variable or variable situation. Good. The next like what? 15,000, 1, 2, 3 divided by what? 62 minus 50, that would be 12.5. 12.5. That's 1,200, agreed. So this is equal to 1,200 cities per 100, per percent. Agreed. So 1,200 cities per percent. So let's flex it and see that we can get 812. Okay, let me the fixed cost, right? Let's find the fixed and the variable cost. This is the variable cost. The fixed cost will be, let me see, total cost will be, the total cost of it will be the total cost have to be 17,000. The fixed cost will be about with the game. So total cost 17,000. Let's subtract the total variable cost. Here the total variable cost will be, can you multiply 1,200 by May is what? 50, right? So multiply 1,200 by 50, just 50, so it will be 1,200 times 50. That will be the total variable cost. How many get it? Okay. So total variable cost give us 1,200 times 50. I'm getting 60,000 FF1. This is 60. When I take it off, I'm getting 10,000 cedis. 10,000 cedis. That's the first cost. Let's confirm what we had first. Here we are using percentages, not units. What we did first, use what unit. The examiner can answer the question, it will be pure percentages, no unit. That is all. Then we go to if I'm using June, the same answer. June 2, you can do that, you get the same. Now let's flex it. So I'll do it again, and then we start the flexing. I'll do the flexing here. If you want to find the y is equal to a fixed cost of 10,000 plus 1,200 x. 1,200 x. Here, x is equal to the percentage. The percentage that you want. Formerly, the x was the unit. Here, x is what? The percentage. So here, x will be what? 85. So just multiply this by 85. That is all. That is the determinant. So in this case, it will be like this. It's equal to 10,000 plus 1,200 into bracket 85. That is all. So let's start. 85,000 times 1,200. That will give me 102. Same answer. Plus the 10,000. 1, 2, 3. 112,000. So I'm getting the same 112,000 here. So whether it's percentage or units, you get the same answer. Whatever it has, we are free to go. Another note, that is the end of flexible budget. Now, I think just I'll scan through some few questions for you to go and try them once you're waiting for your. Can you try this questions? Only 3 questions. That's all for flexible budget. Can you continue with the video? Then we have solved, I think, 3 more questions. I solved 3 extra questions in the video that are not in this particular material. But those questions in the video, can you pause the video, screenshot the questions, and then that's all you solve the video. Explain the term flexible budget. Tell the example now. This is May 2019 question. ICAG May 2019. Explain the term flexible budget. Tell the example now. The budget prepared to see the current situation. Good. In PhD, we call it supplementary or budget, additional budget. Using flexible budget approach, we draft operating statements so as to provide more clarification to the business. Not allowed to explain the costs. So here my interest is about the flexible budget. So you are going to flex at the actual level. So the last question material. So I'm going to flex that on the actual level. So the budget one is for 6,000, which is 100. But if you do the original one, clap for the examiner. Now I can just express 5,400 total 6,000. That's 90% or so. If it's 90%, all the variable I can take was 90%. Good. There's a fixed cost here. The fixed cost is 36. Take the 36 and put it in there. We compare. But then you compare that one with the actual one and now find the new differences. And that's the end of the first game. That's the end of the first game. So that's the end of the first question. And that is the May 2019. Okay, so then from here, I'll go to the public sector accounting question And then I'll come to the last question, then we are done for the day. Right. This is question 2019 May, question 3. You see that you have 6% level of activity, 80%, right? And these are actual results. You are required to prepare a flexible budget for 50% level of activity, 50%. 50%. The ministry's normal level is 70. The district represents 70. So how do you get the flag at 70 and you prepare variance? Variance compares or the flexible budget to that of the actual. That is all. Now look at this question carefully. In the following year, look at them. This one is public sector accounting question. The following year, that is November 2019, the same question dropped for the man account. Let's go to that particular question. This November 2019, man accountant prepare the budgetary control statement. Checking this is 75, this is 85, this is 95. You are flattening that towards 82, and this is the actual for the 82. So what do you do? Then you now compare this to that of the actual. Then you find a variance for 10 credit marks. That's November 2019. Good. So that is all for flexible budget. And I know this is how far the good Lord will bring us. Can you go through all these questions? Capture them, screenshot them, and then go through all these particular questions. And then you back. Okay, so thank you very much for coming. Have a nice evening and a nice day, a nice morning, a nice afternoon as well. Please, if you have not subscribed, kindly subscribe to the channel, share the links with your friends. I'll see you again when I see you. Good night day.